Hello everyone, welcome to Rajeshwari's Commerce and Management Study Hub. I am Rajeshwari here. We are solving the previous year question papers of income from house property. We have solved already 2025 question Jan Feb. Now we are solving 2024 question, section C, question number 9. Miss Sundri owns 3 houses in Mysore. From the following particulars, compute her taxable income from house property for the assessment year 23-24. Particulars: House 1, House 2, House 3. Municipal rental value, fair rental value, actual rent, unrealized rent, municipal tax paid on municipal value, repairs, interest on loan taken for construction, how used, let out, self-occupied. So you no need to worry about self-occupied because you are not getting any income from that. So you are not going to calculate anything on this. And you are going to calculate another 2 houses, that is house number 1 and house number 2. I'm telling you students, believe me, this is most easiest chapter and you can score out of out. Only thing is you need to remember the format. That is most important, and don't buy heart. Understand. Always remember, if you buy heart, it will not be there for longer duration. So you need to understand the format. Okay, I have done the conceptual video also. You can watch that video if you are not watched it. First, you need to take it municipal value. So what is the municipal rental value? It is given 1,20,000, 1 lakh, and this you are not going to calculate. Municipal value 1,20,000, 1 lakh. Here it is nil. With this, you are comparing the fair rental value. Fair rental value. Fair rent value, it is 1,30,000 and 90,000. 1,30,000, 90. Now, by comparing these two values, you are going to take whichever is higher amount. This will be called as notional rent. 1,30,000 is the greater, and here 1 lakh is the greater. Now, this value you are comparing with the standard rent. Standard rent. See, standard rent, it is not given. So, leave. But you should not skip writing in the format. If it is not given also, you have to show it in the format. Remember this. Whichever is lower, same amount you are taking. 1,30,000, 1 lakh. This will be your expected rent. Now, with this you are comparing the actual rent. For actual rent, there is an adjustment. What is that adjustment? There is an unrealized rent. This should be minused from the actual rent. For house 1, there is no unrealized rent. So, take it as it is. For house 2, it is 1,20,000. 1,20,000 minus 10,000. 1,10,000. 1,10,000. 10,000 is what? Unrealized rent. Now, this will be called as your gross annual value. Gross annual value, whichever is higher. 1,44,000, 1,10,000, nil. Then from this you need to minus, in case any vacancy period is there, that should be deducted after the gross annual value. Here in the question there is no information about the vacancy period, so we are not going to take it. Now your minusing, you are deducting the municipal tax. Municipal tax will be calculated on municipal value. It is given 10%, 10%. On 1,20,000, 10% is 12,000. On 1,12,000, 10% is 10,000. This is your net annual value. 1,44,000 minus 12,000. 1,32,000. 1,00,000 nil. Now deductions. Less deductions under section 24. The first deduction is standard deduction, 30% of NAV, net annual value. On 1,32,000 into 30% is 39,600. On 1,00,000, 30% is 30,000. And next, interest on loan. Interest on loan. Here you can see 20, 10, 8,000. 20,000, 10,000, 8,000. Your income from house property is 1,32,000 minus 39,600 minus 20,000. It is 72,400. 1,00,000 minus 40,000, 60,000 minus 8,000. Now total income from house property 72,400 plus 60 minus 8,000. One lakh 24,400 is your total income from house property. How we calculated? We have taken municipal value. We are compared with the fair rental value, whichever is higher. This will be called as notional rent. Then we are comparing with standard rent. Whichever is lower will be considered. This will be called as expected rent. With this you are comparing the actual rent. If any unrealized rent is there, that should be deducted. Then you will get gross annual value, whichever is higher. Here any vacancy period is there, that should be deducted. Then minus municipal tax paid by owner, you need to take it. Then you will get net annual value. After this deduction under section 24, the first deduction is standard deduction, 30% of NAV. Then interest on loan. If you minus, you will get income from house property. I hope you all understood. Thank you for watching. Have a great day.